Hello trader, this is Ash Ham from LearnDayTradingFast.com, January 24th, 2012, 12:41 p.m. Just wanted to share with you a strategy today, which is absolutely, I'm looking at my platform live right now, and the stock symbol is on NASDAQ, BVSN. I usually don't like to trade after 11 o'clock because that's the market when it's consolidated. It goes sideways because institutionals and hedge fund managers, usually they leave the market after they make the first runs and two, and they take off. But today what caught my eyes exactly is this. I'm looking at the stock right here, BVSN. As you see it moved all the way from $10 to almost $40. It tells me that it's extended and there's so much power behind it, especially when you see these moving averages all converge together and then diverge. It's like putting your thumb on a water pipe, and as soon as you take your thumbs off, the water just explode, and it exploded to the upside. That's bullish. But it tells me that what happened is that since it's extended, it moved, we're going to see some kind of retracements and pullback because the market maker usually does not like to accommodate. So what's going to happen now is I believe that the stock will retrace and extend to the downside, and usually because we have two families, either you want to trade with the major trend or the diverge from the major trend, which is the pullback or the short to the other side. So let's go back in real time. So I wanted to give you attention. So what I'm looking for is, will I go long right now with this stock? I don't think so. The entry was exactly at $15.50, something like that, $16, and it goes all the way up, especially after the moving averages diverges. And that's exactly what I wanted to share with you, that when you see moving averages diverge like this in a narrow tight pipe and they're ready to explode after what I call a long consolidations, almost from August 15th all the way to almost December 19th of 2011, and all of a sudden it takes off. It's like this theory is simple. It's the same thing as when you put your fingers with a water pipe and turn the water faucet on, and it makes it strong, but your thumbs holds the water and all of a sudden it explodes, and either it's going to be a bullish or bearish. And this right here we see it's BVSN, it's bullish to the upside. So I'm looking for what I call a retracement to the back to the downside after a run to the upside, and now what I call is the hedge fund managers is going to come over and push it to the downside, and online day traders and everybody else will follow, and that power will push it to the downside after institutional run-ins to the upside. So what I'm going to do is I'm going to go into the 5 minutes, and I expect the stock anytime soon is going to retrace to the downside. And what will I enter? Will I short it right now? Absolutely not, because it tells me that it's still to the upside and there's no other signs beside, of course, it's being extended and running from $15 to $40 to the upside. So it might continue up to $50, $60. But how will I short it? What I will look for is exactly at the short of $36 or $35 and continue after a bear cup to the downside. Other than that, no, you can't do it because you want to be a proactive, not a reactive. So I'm going to go to 5 minutes right now, and I'm going to see it. I'm going to look at my intraday chart, and I'm going to say, okay, well, should I short it right now? It's extended, or should I go up to the upside? Absolutely, I will never short it, because what happens if you shorted it, it's going to completely might go to continue to the upside, and you're going to be screwed and take the short side wrong and absolutely lose money. As you see it right now, it's going all the way from $40 to $42. So I'm just going to go to my daily charts. As you see it, it's already extended, so now it's up to $42 as you see it. So we have a lot of extra buying power in here. So what that tells me to go short right now? Absolutely not. I need to see a confirmation signal after what I call a bear cup. And now how does that happen? It's exactly we do it. I'm going to go to my intraday chart, and I will definitely short it. So let's see right here, I have a little bit slow in my internet, so it's not completely going in to my intraday. So let's just 1 second. Alright, so as you see it right now, it's went all the way from, as we spoke 2 minutes ago, that I was telling you guys that you don't want to just short it for the hell of it because you think it's extended on the daily chart, because it moved all the way from $15, $20 to $40, and you think that the short party is going to come and take it. That's not true. You want to be a proactive, not a reactive, and forget about the news or talking heads, because the news are mislaid and it's delayed. So therefore, you want to be in real time, or you want to be technically correct. So when you go to 5 minutes, I definitely will take a short at it if it loses exactly the 36.50 and make that cup. And after it makes that cup, I will definitely look to get short on it, and short between 300 to 500, maybe 1,000, because it's ran all the way from 20 to 40, and therefore I'm looking to short it, because now the market maker cannot continue to the upside all the time, because the market moves in three ways: up, down, and sideways. And now it's for it to join what I call the diverge party, and that's the opposite from the extended trend to the upside. And now it's going to do is the downside, because he like to ticks off all these people that went and rode that elevator, the elevator from $15 all the way to 40, because he knows that by looking at his level 3 that there was people joined in, and therefore is he wants not to continue, because he wants to take some of that money back and not give it to them, because institutionals ordered him or asked him to move that stock for them by paying him some amount of money, and therefore that's what he did, and that's for exactly what he wants to do now. But now he cannot continue, because they don't like to accommodate for a long time or for a period of time before because they have to diverge after a long run, and that's for sure. So the tip I want you to take today is that the market moves in three ways: up, down, and sideways, and we have two parties in the market. We have if you want to go with the major trend, which is the upside, or you want to diverge from the major trend after a long run, and that's a tip. And the way I just wanted to share with you is that I will definitely short it when it loses the 36.50, and after that I will wait and play it correctly from what I call from support to a different support. So that will be here. I will take my first let's say that I shorted 1,000. I will take 500 or 300, then I'll go in again and wait for it to break the 32 and go all the way down with it to 28. And when I do a position sizing, it tells me that don't take your shares all the way, because it might continue down to $28 or of course more. So what you do is you take gradual sizes of shares and play it accordingly. And that's the tip I wanted to share with you, is that that when you see moving averages converge after consolidations, then what you're looking for is an explosion either to the upside or downside. And the other tip is, do not short or go long right away. You want to be a proactive, because reactive will kill you and of course destroy the online day traders and drain your capital. And when there's another hit or another a play, then you won't be able to get in and you missed on it. And the other one is that with there's two families in the major trend of the stock market. There's the up, what I call the major trend, and there's the down, is the diverge from party one from the major up or down trend. And that's what I wanted to share with you. So please go ahead and look into your charts and scan and look for these where moving averages converge and a breakout, and see exactly if you wanted to continue with it based on the power of you see it in the institutional volume, and try to set your support and resistance accordingly by looking at your intraday, or you can do it in the daily charts and short it or go along with it accordingly. Again, this is Asham from LearnDayTradingFast.com, January 24, 2012. I wanted to thank you so much for listening, and please, if you have any questions, you can email me at asham27@gmail.com, or you go to LearnDayTradingFast.com, order the course. It's 26 videos and 3 ebooks that will definitely take an average or a professional trader to become a better trader and successfully at entering and exiting with pinpoint accuracy.